Recording. All right. We are recording. What's going on, everybody? Hope everyone's good. You guys have a good weekend?
Yeah, man. How about yourself?
So far, so good. Can't complain. Cannot complain. So good.
What's up, squad?
What's going on?
Been a while.
Yes, it has. It has. Thanks for joining. And we're going to go over this strategy for those that are new. Great. For those that are old, we have to learn some old bad habits. What we're trying to do is we're trying to catch the trend of the day. That's our objective, right? Our objective is to catch that trend of the day. We're not trying to do anything more than that, right? So this session is not about the scalping. For scalping, we'll have some things around that, but for those, I may want to reach out. I would want to get like a count of the people that really want to focus on the scalping. Then I want to do that separate. I don't want to change or mix up the messages within the two groups. I prefer us focusing on the day trade. Okay, so if we could do that as a community, I think we'll be good. We'll all be on the same page. So I do have some things here that I put in writing. I wanted to go over a few things, and you guys should be able to see it. It's pretty much an outline of what we're doing, why we're doing it, right? So, you know, our objective, if we start out, our objective is to position ourselves to take advantage of the daily trend by properly and strategically entering positions with maximum probability, low risk, and high risk to reward. Okay, that's the objective. So with that, there's some rules that are going to be strict rules that are going to be in play for us, you know, things that we cannot break. And we'll talk about this. This should reveal some of these things, and we'll start to share this together. You guys can ask questions along the way. The strategy that we're using to fulfill our objective is going to be a price action breakout strategy. And that's going to be for our day trades. That's going to be our objective is to get in the trade from the beginning of the day or from the beginning of the breakout of the day and hold it for the duration of the day. And we're going to talk about that. There are two different strategies. One is going to position us better, but we're going to work through this. So what does that mean? What does the price action breakout strategy mean? Well, we're focused on the candlestick patterns and price structure, okay? That's it. The candlesticks, the patterns on the candlesticks are going to tell us what is happening in the market in real time. So it's not going to be a lag. It's going to be in real time, or it's going to be, you know, maybe a lag of 2 or 3 candles because we're using a combination of candles, but it's the price, the current price right now, and the structure it's made behind it. So it's as near real time as you can think, right? And the price structure is just basically the structure that our candles make on the chart, where we're having double tops or we're having an area of support or resistance. That's the structure, okay? We also need to focus on volume, and the volume is the amount of shares being traded at a given time, right? We can have a positive volume index and a negative volume index. Positive volume index is the count of the movement upward, negative is the count downward. Just because we have volume doesn't mean price is going anywhere, because price can move and just fulfill orders all within a tight area of consolidation. We also want to focus on momentum, and that's when it's just a breakout of range. And that's where we want to really position ourselves. And that is the rate of acceleration that our shares, our security, our indexes that we're trading changes price. It's the speed in which price is changing. We want to enter a trend as it is picking up that steam, that momentum, right? If we don't include momentum and we only include volume, you must know that we could be sitting in a trade for too long. You guys got that? You guys understand that? You guys are with me on this?
Yes.
Thank you for the participation. I love that. I love the participation. So that is super important. So with that right there of what that means, this is from that point, that's all we need to focus on. As far as indicators, lagging indicators specifically, we don't need them, right? And I'm going to say that now, and I'm going to say it clearly, because I think that lagging indicators or indicators that you're using from other strategies, if they're a lagging indicator, like a simple moving average, like, well, a fib is not a lagging indicator, but a fib is a measurement. We're not looking at the fibs. That can give us, if we're in a trend and we know based on our targets, and we'll talk about our targets, if we know that we're going from here and we're going up to this target, these fibs really don't carry much weight, to be quite honest. It can confuse us if we get a fib that's going to make us go into a reversal trade. And also, you know, RSI, that's a lag. We don't need these indicators. These indicators are going to confuse us. If you're looking for that moving average crossover, it's going to confuse us. Once you master this, of course, I'm sure people are going to add their moving averages, their fibs, and so forth. That's okay. I'm not preaching that for this strategy. Okay, I'm not preaching that for this strategy. I'm talking straight price action. Okay. Indicators that identify patterns and structure can be used, right? So if you have an indicator that's giving you that's printing and letting you know bullish engulfing, bearish engulfing, double top, double bottom, these are the alerts that I'm dropping in the Discord, that is fine. That is fine because it's not a lag, because those indicators are actually used down the road as part of our confluence for entry. But any lagging indicator, I'm recommending and I'm saying don't do it. And the reason why is because you're going to be looking for entries or even exits based on those structures, on those indicators. Okay, so we want to stay away from those. This is not the scalping. The scalping, when we're moving at such a high, fast pace, yes, we need some indicators that, you know, moving average, hey, it's touching on moving average. We want to partial it because we know there's going to be some orders sitting around there. Before we get there, we want to take our profits and protect. That's a different day. That's a different strategy. That's not today. Today is strictly price action. Okay, and then as far as the strategies, we have the Asia session breakout strategy, and we also have just a standard breakout strategy, and we'll talk about that. Let's see here. How can I get this back to the norm? Okay. Then we have the Asia session range breakout strategy. Okay. If I could identify this, we're going to define it further in the evening, but basically, this strategy is going to position ourselves to get in either within the wick or the beginning of the body of the day. And we would hope that, you know, we're not going to have such a volatile day, and we're hoping that the trend will continue. Okay, so that is a Asia session range. And the reason why we picked Asia is because it's the beginning of the day. We're talking about a day trade. I don't care about yesterday's weeks or simple moving averages over 3 days and all that other crap. We're focused on today. I don't care if yesterday closed bullish and therefore we should be going up, and that does not matter. And I've done the back testing, and the reason why that doesn't matter is because even though today will possibly go bullish, that wick, that push down wick, that initial push down can knock you out, and you're thinking you should be getting in sooner than you should be. So we want to focus on the day and the day only. And we know that the day starts with Asia session, then it moves to London, and then it moves to New York. And then the cycle starts over. And every cycle, we wipe our slate clean and we start all over with a clean mindset. Okay, so That session, and the reason why we are picking Asia range as the breakout range, or the range to break out, is because the Asia session is going to have a lot of consolidation. Okay, if you take a look, everything that's in red here, this is US 30. Everything that's in red here on this side of the screen is Asia session. That is 8 hours of Asia session. And you can notice it has not been moving. That is the manipulated market. That is the market in which orders are being accumulated by the big money, those that are going to be moving the market for the day when they decide to. Okay, so we need to understand this is why we're looking for the Asia market breakout. And I want to talk about the pros for that. Okay, the pro is we're identifying entries within the wick or the beginning of the daily body. And that's going to allow us to ride that daily body. We're going to be able to ride the day trend, the trend of the day, the entire trend of the day. Okay, it can keep us in, which is the second point. It can keep us in the trade for the duration of the day. The con is that it's non-session specific, which means that we must follow the volume and the momentum as it may shift through the day. Okay, so we must pay attention to New York and London. I'm going to talk about this is that we talked about volume and momentum. Well, if you guys were trading live with me last week or looking at the charts, you know that there was no momentum or volume. Price was not moving. It was consolidating for, we had the charts up, and I can show you again, Asia market. Here, all of Asia, all of this time here, down here, you can take a look. This is 6:30 a.m. So all of London as well, right? We will hope that price will break out in the London session for those that are watching the London session. If not, those that are watching New York, you're hoping that price did not break out in London, and you're going to get the first opportunity to break out. If not, you're hoping that price returns to one of our levels around the Asia session. Is that a lot of information? Are you guys okay with what I just explained, or do you have questions there?
Should be good.
Okay.
I think I'm okay.
I think I get it.
Okay. So, the con, once again, is non-session specific, and that's going to be, obviously concerns for individuals that, if you're on a schedule and you want to trade New York, that's cool. That's great. That's fine. There's going to be times where the days are going to push in New York because it probably, because it's either probably continuing from London, or London never broke out, or maybe it returned back for New York session for bounce and a continuation again outside or around that Asia market, because we're talking about right now getting in when price breaks out of the Asia range, and that's going to be a day trade. That's going to allow us to create the wick. We're creating the wick of the body, right? And I want to draw this out when we talk about this. Well, let's see here. We're going to talk about that on the day. We're going to talk about the importance of the day. So we'll get to that. We'll get to that. Okay. Then we have the secondary strategy, okay, which is the daily, weekly level breakout strategy. Okay. That's not looking at Asia market, although our Asia market strategy is inclusive of this. The daily, weekly level breakout can be traded by itself. Okay. That too is high probability trades. The cons is that it can position us to scalp because we may be catching the trend too late. Okay, so if I had, and I just want to draw this out, and I just want us to make sure we have the same concept. If we had levels here, if we had levels drawn, say this is our weekly levels like this, right? And this is like the Asia market range, say here, right? And we break out. Asia breaks out. We'll start here. Asia breaks out. Like this is London. Let's say London starts here, right? this is a London session. So Asia is back here and then London is here. Price breaks out. If price breaks out, right, and it's moved already at a certain amount of pips, say, I don't know, 100 pips, 200 pips. And this is at this level is now the beginning of New York session, right? So if New York session were here, right? This is the New York session now, right? And we traded this break of a weekly level because London has already pushed 100 or 200 pips, whatever this imaginary number of pips are. We could possibly be at risk of turning around, and we're now having to scalp this position, and with the hopes that it'll go back. But then you're scalping the position. The idea of the Asia breakout is that we're pretty much safe. If we could take off outside of the Asia range, we should be pretty good to go. We're hoping that we're pretty good to go, and that we're going to be in the range, in the trend. Friday, when I traded, for those that traded live with me, although it was an Asia session breakout, it did not break out until New York. And once we got in that trade, we were good all the way up for the 210 pips. We had one target. It was 210 pips away, and it finally hit at the end, towards the ending of the day, right? But if it broke out in London, we may not be out of range for the retracement. We're never out of range for the retracement, right? But we all know that Asia breakout doesn't make you, safe. But the thought is that if the day is going to be a trending day that's really pushing, there's going to be points in the day where it's going to retrace a bit and continue. You may experience that with the daily weekly breakouts, because that could be at any time of day, right? It doesn't matter. It could be 2 o'clock. It could touch a level. And if you're breaking, I'm sorry, not yet, you're 2 o'clock at my 11. And if you're seeing a rejection during lunchtime, say, at a weekly level, you may take that trade. But the trend is bullish, say, and at lunch, you're seeing the rejection and you're selling, you may be subject to a turnaround because it's against the trend. So I just want to be clear that there is a difference in the strategy. If you're up, or you can catch that Asia market breakout, that's really good. And then you can still trade the daily, weekly level breakout, but you're going to be subject to scalping. I've got some individuals here. I think Chris, when Chris and I were working, he was mentioned that he was in a trade that was at a weekly level or daily, one of the daily weekly levels, I guess. And when it broke out, it kept knocking him out because it forces you to be in this scalping mentality, and that's what I'm trying to avoid. We can scalp around these daily, weekly levels, but that's what I'm trying to avoid. I'm trying to be comfortable with holding it for the day. Any questions around that?
Sir.
Let me just clear this. Yeah, okay, cool. So once again, the daily and weekly levels, it could be far away from Asia, deep into the daily body, and you could still make those entries, but you're going to be subject to higher risk. Okay. So now we talk about, well, how do we approach this strategy? How do we actually get going with this strategy? Why is this doing this? I really wanted to, let's just do this. Let me widen the screen a bit. I don't know, I've got these dots here. Anyway, how do we approach the day or the entry? Well, we've got to identify first our battlefield. I'll call it the battlefield, and the chart is our battlefield. Okay. However, there's going to be areas where there's not going to be any fighting. It's going to be a DMZ for entries. We're not going to care about these areas. We only want to care about the areas of interest, the areas that we marked up. So if we're looking at this chart, this is our entire battlefield. But if price is moving up, we don't care about areas here within. If there's a wide area that does not have a markup, you're going to have to stomach that, and you're going to have to just say, you can't get in the trade. That's going to be the discipline. If we put in the work to identify targets, areas of interest, then why are we getting in areas that we're not interested in? That's that FOMO. That's then a psychology thing then that's kicking in. If you guys are looking at these charts and you guys are accepting this as being the playbook, then there's no reason to get in the market if there is no play that we can identify. So I just want to make sure that's super clear, right? So our markups are our predefined targets. That's it. We're not targeting anything else anywhere else. We will talk about if you're sizing in and the types of candlestick patterns that we're looking for to re-enter. You're not going to have a line around there, perhaps, because you're in the trend and there's little areas where there's going to be minor retracements, candles that are printing opposite, and maybe at around certain lower key levels that are not our major priority, but it will give us an opportunity to re-enter. But we don't need to worry about that right now. Okay, so the next thing is, how are we identifying our targets? For those that were on during the last session and that are on the Zooms, you should know we are focused on weekly levels, right? And how we mark them up, as we explained in the last session, is for every weekly candle from the current candle back, we mark up the open, high, low, close. For every candle back, we mark up the open, high, low, close. So I'm just going to pull one up. I'll just create a new chart. Can I even make one? 1, 2, 3, 4. I think I have 5 with this. Yeah. For every new chart, we mark, for every new weekly candle, we mark up the open, high, low, close with exceptions. But I want to get the basic point drilled home, right? This is the weekly chart. So it says, for every weekly candle, we mark up the OHLC, the open, high, low, close of the candle. That's going to be, where's my lines? That's going to be here. This red one is the current week. So we're going to mark up the open of last week, the high, the low, the close. Boom. Weekly, right? We're going to go back and we're going to mark up the previous weeks. We don't have to mark up that week's open because it's too close to the current week's open, right? So we may not need to mark that up, but we can mark up these levels, the open, high, low, close, right? Open, high, low, close, as we all know, makes up the candle structure, the body, the wicks, everything. We can continue. Anything that sticks out, we can continue. We can say, okay, don't need this level. This level is pretty much this line here, right? They pretty much match up. That gives me some confidence that, hey, you know what, this is a level that was revisited and it was significant. Of course, it's a weekly open, high, low, close. A weekly open, high, low, close is going to be significant. We're going to identify that as being significant, right? So we have this area here. Boom. This is pretty much going to cover the low and the open. So we want to continue with this, right? We want to have enough targets below us and above us. So now that I'm going back each week, as you go back each week, you can see, well, you don't have to go back every single week because you don't need that many targets, but you want targets that may be significant. So I may go back and then target this one here. I'm not looking at, on the weekly, I'm not looking at swing highs and lows. This just happens to be a swing high, but I'm not, when I'm marking up the chart, I'm not looking at a swing high for the weekly, because that range is so wide. We're not looking for a swing highs and swing lows on a weekly chart. That's just going to be too wide, right? So we're just looking for significant area levels that will be around current price. So I'm going to mark these up, right? This one is here. Boom. I think I'm good with this. I think this is fine. I mean, this could be one. This would cover this area. This could be one. We'll mark it up. You can mark it up. You can color code it. My weeklies are always blue, right? My weeklies are always going to be blue, right? So I just color code them. That's my weekly levels. Actually, I don't even like this. I'm going to keep this simple right now. I'm going to delete that. That's my weekly level, right? For the next thing that it says we need to identify targets, and our targets are going to be daily levels. And we mark that up differently. We mark up the previous daily open, high, low, close. And that's just going to be yesterday's, the last market day's open, high, low, close. Come tomorrow, right? Well, today's Sunday. So come tomorrow, Monday, we're only going to mark up Sunday's open, high, low, close. And we're going to get rid of the open, high, low, close that we had for Friday. Tuesday, we're going to mark up Monday's open, high, low, close, and we're going to get rid of the open, high, low, close that we had for Sunday, and so forth, right? So I'm going to drop down to the weekly, to the daily. And what do? We look at the previous day's open, high, low, close. This just happens to be on the weekly as well. This line here, this is daily, but we have one level here that we can mark up, right? So I'm going to mark up this level here. I even use an indicator. I color code mine as orange. My dailies is orange, right? You could even say daily, right? You can color code it. This is how we mark up the chart. You guys, so our chart should be relatively the same. There's no major complexities when we're marking up traditional, support and resistance, right? Because then we have zones and we've got all these things. Very rarely should you have zones, but there will be occasions where you will, right? Then what we need to do is, actually, I'm going to add this indicator, these indicators. I have one called previous open, high, low, close, right? If I were to add that, that should, if I'm on the daily, let me mark this up. Let's just see here. I want to be able to change the daily to open, high, low, close. If you guys are looking at my charts, my shared links, you should have these indicators, and you should be able to look and see what they are, and you can include them on your own if you wanted to, right? So I will mark that. That should mark up when you drop down to lower time frames, like the hourly, it should mark up. You can see here, these levels here. This is a PDL, previous daily low, PDO, previous daily open, PDH, previous daily high, right? And PDC, previous daily close. So you can mark these up this way. It's looking at the previous day. This is the previous days. So I did that wrong actually, because I did it right for this. For Sunday, I did it correct. I marked up these levels. These levels are from Thursday, because this is Friday. So you can run with these levels. These levels are important and significant because price is going to check them in the current day. You're going to want to look out for breaks and retests around those areas. That's going to give you opportunities for entries also. Right? And then, so I'm going to hide that. I'm going to go back to my daily. Then what we want to do is we would then mark up our swing highs and swing lows on the daily. Any that'll be significant around price. This one's too far, right? So I don't need to mark this up yet. Eventually you will. When price eventually comes down to this area, you're going to have to maintain these levels and you'll have a markup here. But if we wanted to, we would mark up a swing low. We would mark up a swing high. And this swing high is very close to this entire area, right? So when that happens, what I like to do is I like to measure out the number of pips. Right, this is just for me. I like to measure out the number of pips all this congestion is. I'll measure it out and we'll see, hey, that's 48 pips. That's pretty significant. So I won't zone it out. I'll leave it separate because when we're dealing with on the 1 minute, it may be significant enough for us to get in. This range here, 22 pips, I don't care about. This is when I would probably just zone it out, right? And I would just zone out this area to know, and I'll set it as a code, maybe a red, to know, hey, I'm not going to trade in this area. This is an area where I've got to consider. Let me just change this here, make it gray. It's a gray area. This is an area that if price came back up and we tested this area, that I've got to consider that price could actually not just turn around here, but price could actually play this game and then eventually get to this level and then come down or continue back up. But basically, it's just it's a warning to me. This zone is a warning to me that I may not want to be quick with entries around that area, because we know that price could, because there's a wick here, price could push up from the body to the wick. So that's going to allow me, hey, this is an alert. This is like a cautionary warning to say, this is not just a level, this is a wide level. And I need to be careful because I don't know how deep price is going to continue into this gray area. You guys cool with that?
Yes, sir.
Yep.
Yes.
1 second. Close and keep that there. I just want to do something here. I'm sorry, give me 1 second. Just looking at something. I got to turn this off. There we go. Clear all. Okay, cool. All right. Let me just minimize this. I want to look at this later. I'm sorry, 1 second. I'm struggling with something here off screen. Okay, cool. Right. So we talked about the daily levels, previous daily open, high, low, close, and the daily swing highs and lows. Okay. And how many targets do we need to identify? Well, you know, we talked about this last week. We only need to identify enough for the current day, right? So I would say 2 to 3 levels above and below current day. So because we don't have many levels above us here on this chart, we need to identify more. We need to dig in a little bit more and identify where can we find other targets for if price were to break this area and continue up, right? We don't have enough targets, it seems. So we're still on the daily. Let me go back to the weekly and let's zoom in, and I'll say this may be an area. Let's see which area do I like from here down. I like these works here. This may be an area of interest to me. And this whole area is going to be an interest. This whole area is going to be an interest for me. Let's see here. I'm going to go with this high here. This area. I'll go with this. Actually, I'm going to box it out. Right. So we need to have zones ahead of us or in front of us, above us and below us. And now I think, let me drop down to the daily, see if that's truly out of range. I think that's doable actually for a breakout. 254, very possible. Very possible. We may want to start with this consolidation here on the daily. So I may just do a little range on the daily with wicks. Include the wicks there. And I will drag this out. Boom. That may be enough for me. Let me do the border, look that way. That may be enough. This is more than enough targets for me if price pushes up and if price pushes down.
Should those upper targets be blue for weekly?
These, yeah, they could be blue. Yeah, I just changed it, but they could be blue. Yep, so, you'd manage your own color coding and such. This is an example on my charts that we share. It's all, managed accordingly and properly. So the color code, is just for you to know. There's still going to be levels that are going to be respected. But it's just good to know if this is a daily or weekly level. Weekly levels are probably going to have more significance than dailies. So it's just good to know that. So now let's see here. So we've talked about how many targets. We've got the number of targets. So this is our markup. We've marked up this is our battle plan, right? We've marked this up. This is all we want to look at now. We're ready to go. We're ready for market now, right? We're ready for market. And we'll talk about, how the workflow and what timeframes we are sitting on when we're looking at the charts. Okay. But we're going to just work this down. As far as the markups, is everybody cool with the markups, with the markup flow and how that works? And
Yes.
Okay.
Yeah.
And we're all good with why we're choosing weekly and daily?
Yes.
Okay. And the reason why, for those that may not know, or you probably know, but just not 100% clear, is because the weekly and daily is just going to be more significant. They're higher time frame levels, so they're going to be more significant, and we should expect reactions at those levels. And if since we're trading a daily, we're hoping that that's going to be the range that we need, the spacing between zones that we need. It's going to give you higher probability, because when you go into higher time frames, it's just more predictable. It's just more reliable, right? When we were scalping on the one, we didn't work with 1 minute levels on the 1 minute chart. We always went up a higher level because it should be more significant for the lower time frame. And it's the same principle, but it's more predictable in a day if you're looking at the weekly and the daily. I don't mark up 4 hours and I don't mark up 1 hour. That's going to create too much noise for me. And I just want to keep it super clean. So I'm just marking up the daily and the weekly. If there's if I see prices stalling, and that was on the Zoom Friday, if I see prices pushing up, but it's stalling for some reason, I may drop to the 4 hour and say, why is this stalling? So I can understand it. But for me, it may be a retracement of some sort, but since I know the day is already bullish and I'm expecting that trend is going to continue, for me, that's not going to make me exit the trade. All right, so that little pullback is not going to make me exit the trade. And if you were on the Zoom, we were saying what was going on. Does someone have a markup? Is there a level here that we're not seeing? We're just focused on the daily and weekly. Is there a level? And we dropped down and we saw something on, I guess, the 4 hour or the hourly. And then we said, okay. And I actually used that as an area that when price retraced off of that level, once it pushed back up, it was another buy-in, right? So we stick to the daily and the weeklies because that's going to dictate the direction the market's going if the market's already moving right now. Right, so it's going to touch those levels. The majority of the time it's going to touch those levels. Okay, so now what we want to talk about is the setup. What we're looking for. We're looking for the break or rejection of these predefined areas, right? And what does that look like? What does that look like? A break and retest. What does that mean? You hear break, retest, then continuation. It's all of this noise or a lot of language that can confuse. Well, what am I really looking for? I'm seeing a break, a retest, a break, retest, and continuation. But is it a rejection against the trend, or is it a rejection of support now with the trend? There's so many combinations. So I'm going to spell it out with you what it looks like. Okay, so what it looks like is simple. Let's see if I can get my annotation tools again. Annotation. All right, let me change the size here because this was just a little too large of a do that. All right, and here's my arrow. Okay, cool. So say we're moving up in price. Price is moving up. Geez, say price is moving up, right? Well, here we're going to focus in this area. Price is moving up, right? And when price gets to this area, and this is a high level, a high time frame, an area of interest, there's only a few combinations that we should expect this to happen at this level. We've already identified this level as an area where there's going to be a reaction. What we don't know is what is the reaction, right? So there's a few different combinations that could happen, right? As price approaches, one, it could break. It could test. And this could be a variation of this, or maybe a little bit above, and then it could just completely reject. That's one scenario. Another scenario is price could push. Geez, price can, I don't know why my thing does that. Price can push up, break, retest, and continue. That's another combination, right? We know that. There's another combination that price can break. Price can break. There's something with this annotation tool and my full screen. Let me do this again. Let me do it with this tool instead. Let's do it with this tool. Actually, the arrows here. Price can break. Right? Price can come back down, and it could dance here. Continue under. It can. This is so annoying. It can come back up and then reject, right? So there's going to be a rejection, or there's going to be a continuation. Where the hell is the arrow again? Oh, this is annoying. I've got too many things on my screen. Right? Or it could continue back down. There's not too many things or scenarios that can happen. It's either going to be a double top, right? Or a retest, a break, rejection, a retest and break to the downside, or it could break and bounce on the area of support and then continue back up or down. It's either going to break above or it's going to reject it, right? That's it. That's all it's going to do. And we need to identify what it's doing and how it's doing it, right? So we can talk about now I'll keep it in order, the alerts. All of these areas, when price touches these areas of interest, you should be getting an alert. You should be getting an alert, or you can look for the alerts in the Discord. I'm setting it up so that my areas of interest is going to alert the community, right? In the Discord, under the alert section. You can do the same. You can set up your alerts at these areas and just get notified, because these are weekly and daily. We're trying to catch a daily trend. And because we're not trying to be a slave to the charts, we're not scalping. We want to be able to free ourselves from these charts. And for me, the alerts is a game changer for me. The alerts keeps me living my life and then revisiting when I get an alert that says, take a look at the charts. And you've got to just manage your alerts, okay? For me, I wish I had Discord on this machine. I don't. But for me, what I do is if I'm looking at, I've got numerous alerts set up, right? We've got double tops, double bottoms. We've got all these alerts set up. What I mute everything except my daily, weekly level alerts that's on the Discord. That's going to trigger when price touches these areas. Once I get that alert, because I'm not getting all the other noise, that's going to keep me from looking at my alerts. And this is workflow. We're jumping the gun. This is workflow. We'll look, and then I'll go to my Discord and I'll enable all of the other alerts, because now that price is in my area, in my targeted area. Now I want to know what's going on, right? And the alerts let me know what I need to look for. And now we can talk about candle structure in each of these scenarios, right? In this scenario, candle structure can look like, let's see if I could do this this way. For this, candle could look like these are candles. I'm going to draw on top of the arrows so that we can kind of see how the candle is being created, right? Candle could look like this. right? We're gonna have wicks and so forth. Candle could come up again, push up here, right? It could then create a wick, a nice thin wick here, right? I'll expand this, right? And then the candle can come back down. It could start to reject. It could come back down, right? Where it comes back down is important, right? It could come back down like this. And we're talking about candles. We're getting too deep into candles right now because that's another segment, but a candle could come down and look like this. Does that to you feel like price is going to reject this area? Probably not. Probably not, right? Not yet. It's too soon. This would be more of this scenario. Let's see here. If I could do this. It's so annoying to use this tool. I've got to try it with the other tool. I'm sorry, but this annotation is easier, but it's a pain. Let's see here. What is it doing? Let me close this window. Close the meeting chats. Why the hell is it doing that? Okay, so now. Give me a second, everyone. Sorry about this. Let me do it this way. Let me minimize this. I think it's because it's maximized. Can you guys see the full screen? You guys can see that, right?
Yeah.
Yes.
Cool.
Yes.
I'm going to clear this out. I'm going to draw this again. I think now it'll work. I think it's because my Mac was in full screen. So I'm going to draw this out really quick again. On the combinations, we know that price can touch this level, break, and reject. So it's breaking every layer of resistance, making it support, and then it can continue. We also know that price can shoot up to some degree, and then it can shoot down. Right, this is more about the entries and how you guys are going to enter, right? Because there's a lot of questions on how do you enter and how do you know what to enter? Well, I'm looking at candle combinations, candle formations, right? We know that also price can, we can do some double bounces, we can do this and then continue. You can have this combination where it's going to do this, reject, and then shoot up. There's a few different combinations that you can look for, but how this would look like in candles, which is what I was trying to get to, is you can have something look like this, where this candle is going to look more like this. Price comes up, right? It creates some sort of little wick, right? Then we get a red candle, right? And you're going to get a top wick. And when people see that red candle, people start to jump in. That's not what we're looking for. This is not strong because, and I'm going to send you guys a video on candles. It's not strong. For one, the body of this candle needs to, the deeper it goes into and retraces this, the bullish candle is going to be what we're looking for. Okay. And I'll show you that here. So now, if we get this, the close, and now we get this. You may even get this. That's going to be a strong indication of entry because it's showing that price is pushing above the previous candle's body and wick, right? You would want to hope that there's going to be a wick on the bottom if this is even a stronger candle, all right? Because probably that means that this candle came, it closed here, the bears pushed it down, the bulls pushed it all the way back up, and it also just engulfed this candle here. It's an engulfing candle. This is an engulfing candle formation. Okay, so that's what you want to look for, right? this structure here, I'm going to draw this one out a little bit better. Let me see. I'm gonna do this one a little better here. So this one can look like this can look like, I'm just gonna draw it out. Candle, oops, candle comes up. Candle looks strong. Another one comes, boom, looks strong. The other candle comes, and there's so many different variations of this, but one could be, say there's a gap down, right? A gap down, and it does this, right? With this going on. Is that a strong candle combination? Absolutely. Because once again, it shows that the bearish candle is encapsulating is two bullish candles. And this is stuff that I'm going to show you guys, but I'm looking for engulfing candles. Engulfing candles are going to look like this. All right. You guys all know what engulfing candles are. You should know engulfing candles are going to look like this. Right. Engulfing candles can look like this too. The first one was bullish. This is bearish. That's a candle formation that we look for. We look for morning stars. This would be a morning star that I just drew out. I'm sorry, an evening star that I just drew out, this here. This could be considered an evening star. And the reversal of that on the bottom trend, on the low of the trend, the swing low would be the morning star. And that'll give you indications. If you see these candles around our areas of significance, our targeted areas, then that means that we're building up confluences for our case that price is going to react, and it looks like price is going to reject. In this example, is going to reject this area of structure of a targeted area, a significant level. Okay. Well, is that enough? No, that's not enough. Because why? We need to look at the daily candle. I'm going on a whim. I'm going to get back to the structure, but we need to look at the daily candle. Say you got this structure that I circled, right? But the daily candle looks like this. The daily candle looks like this. I'm going to paint it on the side here. The daily candle looks like this. Right? This. Are you going to get into this trade? Are you going to get into this trade? Can someone
No, me probably, yeah.
say again? Say again?
No.
I said
Because
no, me probably, yeah.
Yeah.
You mean, should we get into it?
Yeah,
No,
yeah,
because
yeah.
it's a
Yeah.
positive daily trend.
That's right. That's right. Because we're not scalping. You go back to our principles, right? Our principles stated that we are not going to, we stated that we
I
want.
got a quick question on the candle formations. After you've got it marked up and then you see a morning star or evening star or engulfing, what time frames are you basing
I'm
that
looking
on?
at
5, 15 or what?
I'm looking at the 5-15. I'll even look at the 30, but I'll look at the 5 and 15.
Okay, and you place your trades on those and then manage them.
Yep, I place in my trades usually on the 15. I'm looking at the 5 and the 15, and I'm making my trades off of those.
Okay, thanks.
Yep. Usually, but I'm usually sitting on the 1 hour. We'll talk about that. That's another segment down here on time frames that I have right down here, time frames. So we'll talk about that in a moment. So you're not entering this because that's not our strategy. Most of you guys are gonna, if you're coming from that scalping strategy, I know you're taking this shit. And I'm telling you, don't take it. Don't take it. You guys got to be cool with not taking it. Okay, so you have to be cool with not taking this trade. That's just what it is. That's our strategy. We stick to the strategy. We're not taking this trade because it's bullish. If this were a bearish candle, we're taking it. Okay, if this were a bearish candle, we're entering. So I'm always looking at, if you look at my charts, I always have 2 charts up. I have a little corner where it's a daily chart. Right here, there's the daily chart here. And then I always look at this. I want to see, is it bullish, is it bearish? And I'm looking at my action that's going on the 1 hour and the, and so forth. Okay, so don't take it. Stick with the trend. Don't, the double tops and the double bottoms, guess what? If you're doing a double top and a double bottom, I know that we've all heard it. If you're looking at those double tops and those double bottoms, most of the time you're looking for it to reject and go and counter trend. That will work. But the odds are not. The odds are not, until you start to familiarize with yourself with, oh shoot, this is a blue line. You know, thanks Jack for calling that out. That those yellow lines should have been blue. This is a weekly level. I'm going to take the chance of entering on a weekly level double top. This is a double top on a weekly. This is a double top on a daily. Okay, the more you go down in time frame, the less the odds are going to be. This is a double top on a 5-minute. You're going to be scalping that, chances are. You're going to be scalping it. So I'm saying stick with the trend. The setups that we need to be looking for this here, for this whole setup here, we need to be looking for, I'm going to do this. We need to be looking for, this is a setup here. I'm going to just remove this. You know, your setups that you need to be looking for this is the, you know, we'll call this the 15-minute chart here. And then you should be looking for a daily that looks like this. You're looking for a daily that's going to look like this. Like this. Right? Or yeah, you're looking for a daily that looks like this, or somewhere where there's a day. This is a daily candle, because you got to assume that then price is coming from all the way down here with this example. We're assuming that price is coming from here, right? But price could have come from here, and then, you know, it could have really been a rejection. So you got to look at where you're at with price, and this could have been like a daily candle. So if you're seeing a rejection that is counter trending, don't take it, please. Don't take it. We want to trade with the trend, and that's it. That's it. The only time that I traded against the trend was Friday at the last half hour, 20 minutes of the market day, because it hit my target after 220 pips pushing. I would expect some, you know, people are going to want to dump on a Friday their sales, you know, their profits, get their profits. And I took that chance. Okay. But when I'm taking that chance, I'm changing my lot size. And we're going to talk about that too. We may have to break this up, but we're going to talk about that too. We still got a good amount of people on here, so I want to just make sure as people are on here, I want to continue. And if it's too long and too much information, we could always extend, you know, pick it up the next day. But let's rock and roll with this. Trade with the trend. Period. That's it. Don't do anything else but trade with the trend. And that's why I like the Asia market breakout strategy, where we follow the volume and we follow the momentum, because the minute you get in that trade, you're at the beginning of the trend for the day, and you're riding it for the day. That's what we want to do. Where are we at this? Where are we at here? The battlefield, our markup. So we talked about that. Let's clear all this, right? We talked about that. We talked about the weeklies, the open height, the dailies, the setup. So we're looking for the alerts, the confluences. Once again, price has got to reject has got to break or reject our predefined area. It's got to arrive in our area. We're going to get an alert. You guys should be having an alert, so you're not getting tired sitting at the markets. We want to be fresh. We want to arrive fresh to the charts. We don't want to be sitting around all night, all morning, waiting for the charts. You're not fresh after a certain time. You're going to start seeing things. You're going to be seeing smiley faces and all this stuff in the charts. Forget about that. Just arrive when you get your alerts. Master the alerts. It's simple. It's an alarm clock. Set it up. Candle formations. Rejection. We want to look for rejection of structure. We talked about that. We talked about with the daily trend. We talked about that too. The lightning bolt indicator I'm using as well. It's not a lagging indicator when you're looking at that LB entry, because it's showing where it's overextended outside of like a band, and it's kind of showing where there's a candle, and that's going to be in a formation usually of a morning star or an engulfing candle. Morning star and engulfing candles are not new. Okay, we're using them a little differently on things, but I'm not, you know, they're not new. The lightning bolt strategy's been around before you guys knew me. And I knew you, you know, we've gotten acquainted. Okay, so for me, there's things in that lightning bolt strategy that give me strong confirmation. And usually when you see a run and you look on your charts, there's a lightning bolt there. Okay, so that is the indicator that I'm saying to use. And when we talked about the indicators that we don't need to use, here's one that I'll say we will use. Another one, the others that I'll say we can use are like the daily, weekly levels. That's an indicator, but it's just giving you a line of a previous day's open, high, low, close. You know, it's giving you a double top or a double bottom. If you have structure indicators that's showing you structure, use it. But if it's a lag, if it's, you know, we talked about this already, if it's a moving average, a lag or anything, don't touch it. Don't. And the workflow, once we mentioned it, we identify our targets, right? We identify our targets on the battlefield. We know that we're going to war. The charts is our battlefields. We're identifying our targets. Those targets are going to be our predefined areas. We're setting alerts at these targets, right? And for those that are looking at the London session, for the London session trade, we're going to focus in on that now. We have to look at what is happening in the London session. And this is going to deep dive into how a daily candle is born and is structured. Every day is the same thing. Every day. Take a look. Let's take a look. I mean, if we look at this here, Asia market, boom, this here is this range here, Asia market, right? I like green. I don't like red. I like to feel positive, although we make money with red. Also, Asia market, look at that, right? Let's see here, Asia market, right? Look at that, right? And then look what's outside and beyond Asia market. Look at all that opportunity. Look at this. Look at this. Look at this. On days like that, if we're getting in on the break of Asia market, swing high and swing low, the high and low, and we're getting in the beginning of the body, right? This candle was formed like this. Look at this candle here. This candle was formed like this. Asia market, let's see here. It was created like this. Candle pushed, right? Actually, I'm going to keep it super fair. Price came, market opened. Price shot down, it looked like this. It did wick up. Here's a wick, it wicked up. So say it wicked up here, right? And then it shot down. So this is just I'm just going to draw a fat candle. I'm just overlaying it, right? It's looking like this. Right? And it came back up. So price came down and it shot up. So that means that if you take a look at this, this is to Asia market close. Yeah. Or pre-market 11 o'clock would be good. It looks like this. No, I'm sorry. It looks like this. It looks like a wick. Let me clear this out. It looks ugly. And I need a darker one. It looks like this. Wick. This is the wick. Right? And then here becomes the body. Body. Right? So this is a bullish day. Body. Right? Now, here is where New York came into play. I mean, London, right around here. The body was already created, right? It started to be created. But at this point, this was starting to form a doji, right? It started to form a doji now, right? When we came down here, the candle really looked like, and by the time we got to this point, the candle looked like this. The candle looked like this. It even became thinner when it pushed down here on this candle here, right here in this candle here. It was super thin. It really came down to almost a flat candle again, like this. And because this was in London and we were retesting multiple times at our levels, we could have had opportunities to enter at numerous points. Right? We could have entered here. And the reason why is because that's a doji. And we're looking at the 30-minute. That's a doji, right? Look at this one here. This one here, although price came all the way up, and this one's even better. How about this one? This one's a doji. This is a doji as well. But also price shot all the way up and came down. I like dojis, and so we could have entered here right at this level. I like these kind of candles because I look for wick filling candles as well. Right? So, you know, for those that are on the live, we've talked about these wick fills a few times where it'll form and we're saying, well, what is that? Well, I like that because it's a wick fill. If it's even though the majority of, you know, it pushed all the way down, the bears came in, it still closed bullish. This is an opportunity for a wick fill. So this would have been a great opportunity to enter. And then we had from this point, from right here, up to ride for the day. This one here was strictly, the body started here. If you take a look at the previous day, the body started, since price shot up, it was a full body, it then retraced, which created a wick. Right here. So this was all wick. This was all wick. All wick. Come London, right here, is when it broke out of this area and created body for the day. Yeah, it is red. Body for the entire day. And we would have gotten in right in this area. Right in this area right here. Let's see if we can drill down. What day is this? This is, let's see, what day is this? This is, what day is this? January 23rd, right? Let's look at January 23rd on, say, let's drop down to the 15th. Let's clear this out. January 23rd, the 23rd, right? Go down to 5, January 23rd. Look. Am I looking at the wrong day? January 23rd. Did I see that right? Oh, it's this one here. Yeah. So this one here. Let's zoom in. Right. Look at this. Come London open. Look at this candle here. Engulfing. Beautiful engulfing. Price came up and it dropped. You've got how many engulfings? You've got 1. You've got this one here, rejecting our level of support. That 1, 2, 3. This would have been the beautiful entry. That would have been the entry for this move. You're not always going to get engulfings, okay? Because I know we want to follow it by the book, but you're not always going to get engulfings. Sometimes you have to compromise. Sometimes you're going to have to compromise you're going to have to compromise on your entries. If you can start to notice momentum is kicking in, then you'll start to make these entries on a momentum move, right? With momentum in mind. Okay, so you're not always going to get it. You're not always going to get the engulfings. But you want to look for the momentum, right? That's the difference between a entry on a candle open and an entry on that is impulsive. The people that get in on the impulsive entry is because they're seeing the momentum is kicking in, right? So here, because this candle is so long, it's so tall, that some people may have gotten impatient and they may have said, well, let me get in since this candle is now breaking, we see signs of it rejecting. I've had previous engulfings and we see that it's breaking the previous, the current lows here. I may just pop in right now. I'm going to get in. and the life of this body may have shot down, came back up, it's doing all this movement, right? And it already made a high, it's coming back up, it's showing momentum. They could have gotten in at any point after noticing momentum, after noticing maybe price shot down below the low. So you're gonna have to compromise on some of your entries. You're not going to just see like an engulfing all the time. At the moment where you may get engulfings above your, you may start to see engulfings above your area of your targeted area. And then it broke and you're like, shoot, well, where's my engulfings? Where's my engulfings? And you may not get it. You may have to say, it doesn't necessarily mean that you're entering on an engulfing, right? It does, I don't know, you know, if you've heard that before, but if you're stacking your confluences and you see, I've got engulfings first, okay, now it's broken structure, that may be enough for you to make the entry because you've got two confluences, right? It's not always going to be where it's breaking a structure first and then it's printing an engulfing. Because to be honest, the chances are the engulfing is going to be when price has reached its high and then it's turning around and it's starting to give you that push. So you may get it above your area. So you need to compromise it. I would say count your confluences. You don't have to synchronize your confluences. Count them. Like that may be helpful to some of you that may be having a hard time with the entry. You don't have to enter on an engulfing on a live. I don't know if you guys have seen me enter on an engulfing. Yeah, there were engulfings, but I didn't enter on the candle right after the engulfing. I'm counting the confluence. Okay, we know it's around our structure is rejecting. I'm seeing momentum and volume is kicking in. Okay, there was an engulfing maybe 2 or 3 candles away that's supporting me. I've got 3 confluences. I'm going for it. So it's not going to be cookie cutter all the time. We have to follow the rules, but we have to allow a little flexibility around some of the rules. Okay, a little flexibility, and I'm not talking about flexibility on taking that reversal on that double top. Not that. I'm talking about you've got a few confluences already. You may not see them in order, or you may be missing one of your confluences. You may see it may look like it may look like for an entry, it may look like engulfings 4 or 5 candles ago. It then broke your structure, but you also have, say, an LB. You've got something else to consider that this trade is going to go in your favor. Are you guys cool with that?
Yeah. So you're really mainly saying if the daily candle's bullish, only that's when you take a buy. Daily candle's bearish, that's when you take a sell. You do not want us to counter trend until we
master this. I know you guys are going to do what you're going to do. I mean, we're all going to do what we do on these charts. I'm recommending that we just trade with the trend and we don't counter. That's what I'm recommending, because even if you waited, where's that chart? Even if you waited, say this day is like, we see it's bullish, right? We see it's bullish. Current day is bullish, right? And say we had a level here. I don't know. Say we had a level here. I'm going to remove this. Let me just put this in like a different color so I know it's not mine. The way I look at it, if I'm day trading and not scalping, if I'm day trading, because it's rejecting here, I would much rather catch it on a level below where price could bounce and then continue to trade with the trend.
But on that situation, I think it's the 23rd that we were looking at just a second ago.
23rd, yeah.
I wasn't looking at time. It was on your chart, but it looked like New York honestly just went straight up.
Yeah, I think we were looking at, this is the 23rd here. I don't know why.
Yeah, so it looks like,
I think it's a cross day, but this is it here.
right. And so if you look, basically it bottomed out probably during London and then went straight.
Well, no, because the red candle here, you see this red zone? This red zone is all Asia,
Okay. Okay.
right? We don't trade in Asia.
Right. Right.
I failed to say that. We do not trade in Asia. That's why I keep mine in red. We do not trade in Asia.
But even at that, it did hit its lows like in Europe, and then retest those weekly levels.
Where here? Down here?
Yeah,
Where-
like
Yeah. Say that again. I'm sorry. I just want to be
I said,
clear.
it looks like it hit its lows in London, and then basically started trending up
Correct.
from then.
Scroll to the right and you'll see it, I think.
Let's see here.
You're on the 5.
Let me clear this out. So our focus is this day right here, right? I'm going to box it out. Our focus is this entire day right here, this whole range here.
Right.
All right. So let me just clear this out. Boom, boom. This is our range, right? So our entry, if we're doing an Asia market breakout, our entry would be, for Asia market breakout, our entry would be below this level here, right? And if we had gotten in, we would have wrote it. At some point it bottomed out, but you can see it also gave you opportunity to re-enter it again once it retested that Asia market level and our significant levels that were predefined. But are you saying that we would have missed this whole up move? Is that the concern?
No, so I mean, my thing is like I'm most likely never catching the Europe market, the European market.
Yeah.
And so like if I would have taken just sales, like once it did that final rejection off that second entry it gave us,
Yeah.
like it only climbed after that. And
That's
so
right.
you see what I'm saying? Like after that one big fall where your cursor just was,
Yeah.
it pretty much just climbed from there on out. So it's like if I was just taking sales because it was a bearish day.
Yeah. Well, you've made 70 pips. That
Right.
dropped 70 pips.
Okay.
I mean, we're talking about a day trade. So this was a 70 pip drop. For me, I'm good with the 70 pip drop. There was a morning session I made and I said, I don't even need to be in there for London. It was only like, 60, 70 pips. That's a
Yeah, I'm not worried about. I mean, I'll be more than happy with 70 pips. That's really
Yeah, yeah. But you're thinking that perhaps you may not make the trend trade. And this is what I was saying earlier. So in this example, if we study this a little bit further, we may not make the original push because it happened in London, and then here is New York session. Well, New York actually started here. New York started here at this level. And this is not my, oh, this is GJ. Okay, so this is I'm just marking GJ up because I want to onboard it. This is not even the real chart. But maybe there was a level here, maybe not. If there was a level here, maybe there's an opportunity we would have entered again on the sell with the trend of the day.
If I understand you, Squawk, I think what you're saying is if we see the Asia breakout happen during the London session, then if we can only trade during the New York session, we're just looking for trade entries that agree with that trend that happened in London,
Correct.
right?
Correct. So for example, here, say we missed this, and that's what I mentioned here. We have two different trading strategies. We have the Asia session breakout, right? And we have, where is it? Where is it? Okay, yeah, this is what I want, I think. Right? We have the Asia session breakout. The con is that it's non-session specific, so you may miss it in Asia, right? But we also have the, where is it? Where is it? Daily wake up. Why does this not look like the current page? Then we have the daily, weekly breakout. And the con is that it could push you, it could put you in a position where you're scalping for entry. Right. So when I'm looking at this, it feels like, you know, even if there were a level here, it feels like we could be scalping for entry, but at least we're with the trend. You know, I'm personally not looking for the reversal. I'm not looking for it. And that's my only thing is, yeah, we missed the whole uptrend, but I'm not looking for it. I'd much rather wait for the uptrend to end in the same day and see if it's going to give me a continuation down in the same direction. I think that's going to give us, that's the safest trade. I think that's the safest way to trade without, you know, getting caught up with direction. If we just say the daily candle is going to give us the direction of all of our trades, we've eliminated a lot of thinking and a lot of risky entries, risky trades. Because this was the bottom. How do we, well, it didn't break structure. Here I can see, yeah, now it's breaking structure because we're getting higher highs. Here's a higher high, but you wouldn't know that this is the higher high because this could be a double. It gets so confusing. If you were to look at this, at this point here, this is a double top. But where was the change of structure? Price came down. It made a lower high. It made a lower low. It made a lower high. Here was the first change of structure. It didn't make a lower low, and you wouldn't have noticed that until it broke this area. So now you're here, right? And then are you going to make that? Where would your entry be for the reversal where it's safe? And then if you entered here, your bar, in the next bar, you're at something that looks like a double top on the 5-minute. And that didn't take you far anyway, also on the reversal. Right? Like we're eliminating trades. If you're getting at the very top, you're eliminating all this crap and decision making. If you're getting in on the reversal, then you're really, you know, now you're scalping. If you're counter trending, if it's going to feel like you're scalping because you may not get into position. And that's what we're trying to avoid. And if the session, if your session or your time frame doesn't allow you to get in with this strategy, then try not to just get in and wait for the next day. Friday session, that full trend, you see volume shifts. Although we're talking about an Asia session breakout, it doesn't mean that it's going to break out in London. There could be accumulation that's happening throughout London session, and then there's no breakout. So we had consolidation and accumulation in Asia and in London, and then New York is the setup. And that's what happened Friday. So anyone that traded Friday, you would have gotten that breakout out of the London session range. I just think that it's risky. And that's what I'm trying to eliminate in the group, right? Because what I was thinking is, if we're going to move from scalping to day trading, then we want to make sure that day trading doesn't feel like scalping. Right. And I think if we're counter trend trading on, you know, there's going to be scenarios where we're going to call it out. I know we are. I'm going to take those and I'm going to call it out. But for the foundation, this is what we want. I would imagine this is what we would want to stick to. For me, that's all I've been doing, except, you know, Friday, I did it at the ending of the day, but I've been trading with the trend every day, with the daily trend every day. And, you know, you guys see what's happening. Unless you are super comfortable with it. I don't know everyone's individual track record. Some people have reached out to me having some difficulties. Some reached out to me killing it. If you can identify it, great. I may take some of these counter trends and just keep it on the low because I don't want to produce that yet until I know everyone's got this, that we're all just looking for entries in the same direction, downstream.
I have a quick question, Squawk. So if you had to choose, like if you have a work schedule or whatever you've got, and you had to choose a session to trade, do you find more breakouts during London session or more in New York, or is it pretty even?
I think it's pretty, I think it's pretty even. I think that a lot of them happen. There's been many times where I've woken up in London, gotten into a trade right after the Asian breakout, and it only was a scalp. And it actually only was a scalp. And I really just, after that, I say, okay, it's consolidating again. And I just wait for New York and it breaks out. So it's kind of even. The one that I got on after I came back home, right off the airport in the back of the Uber, that happened to be an early entry, and that just ran. So it
Got
really
it.
depends. I don't think you're gonna miss much, to be honest, depending on no matter what what session you're trading. Trade the one that's more convenient to you if that's what you need to do. But then just focus on, is price around that Asia range? And if it is, then you know you're probably going to be in it for the duration of for the whole duration of the body. If it's the first time that it's breaking out of Asia range, you're really lucky. If it's the second time, you may be lucky.
Got it.
Scalping, right? So the Asia session, the first duration, the first time it breaks out of the Asia range is the Asia range breakout strategy. Whether that's London or New York. If it's a retest and it's around our areas of significance, our targets, then you're falling back to the high time frame target areas, that secondary strategy, the daily, weekly level breakout strategy. And that's when you're sort of scalping. I mean, I don't know, for someone who's had experience with it, Chris, I don't know if you're still there, but maybe you could explain, your experiences with entries around the daily and the weeklies in London and some of the difficulties you've had. And I know that, some people are having those difficulties timing that entry. And it could be fairly, it could be fairly difficult. You just don't know. You're then in a scalping mentality. You're going to have to scalp it, I believe. And a reversal, you're absolutely in a scalping mentality. And you're hoping that it'll turn into a trend. But a day trade is holding for the duration of the day. That's the definition of a day trade, holding a position for the duration of the day. So if we could get in when the body is bullish and we can ride it for the whole portion of that bullish day, then that's the day trade. Otherwise, you fall back on the same entry points, same confluences, but you'll have to focus around the weekly levels. There were individuals I was speaking to that was showing me, that was trading weekly dailies, and I would text them, there's no way you got in this trade in New York. I know you only trade New York. You're not getting up in London. There's no way you got in and got in that trade if it wasn't in London. If you didn't get your butt up in London, there's no way. So that's my angle. I hope that answer helps you a bit, but I'm thinking if you want to trade New York, great. You're going to trade around the weekly levels, but at least trade in the direction of the day.
Got it. Thanks.
Okay. I think that's just going to give us all as a group the best odds. I think it's just going to give us the best odds to consistently win and get good, a good amount of pips daily if we trade in the direction of the trend. So I hope that helps, everyone that was listening in, or that maybe, is having trouble with those reversals. Just try to avoid it. Just try it for a week. Try it for a week. See your results in a week and see your results, and compare it to results when you have it, when you're counter trend trading. Maybe you are great at the counter trend trading, and that's great. That is fantastic. I know a lot of you are. But for this strategy, I just want to create a healthy foundation for everyone that we're sticking to a daily trend. All right, so then we started to talk about, we talked about studying the Asia market and looking for those breakouts. And then we talk about the time of day, right? So I'm looking 1 hour before London, because this is the ending of the Asia session. I'm looking at London open. What am I looking for? I'm looking for volume and breakouts. For one, if it's an hour before London session, that may provide some volume, and I'm looking to see if price is going to break out of that Asia session range at these times, 1 hour before London and London open. I'll stay open for an hour, so I'm not coming back at that point. I'm staying up from 11 to 12. I'm up and I'll watch it. I'll also look for the London's 4-hour candle, right? These are times where we're expecting volume to come into the market, right? Volume and hopefully direction, right? So London's new 4-hour candle, that's my 2 a.m. I may look, I may not look. You know, if I hear my alerts, I may just look and peek and see. Here's the 4-hour candle, and it's around, it's the 4-hour candle and it's around my level. I may look for opportunities there. If not, I will look for opportunities around 4 or 5 a.m. or listen to my alerts around these time frames. And then of course, New York and New York open. And that's going to be me staying up for that hour, 5:30 to 6:30. And then I'm in New York market. And then of course, New York market close. But you can, Rosalind, in your scenario, you can stay in this area. And you may be fine, because there are days, like I said, if I can find, let's see here, US, no, look at this. So look at Friday. Friday stay, this is Asia market here. This is Asia market, right? Asia market consolidated. All this is red is Asia market. Then if you look at the time below, at midnight is London, all the way to 6 o'clock, it consolidated. All the way to 6 o'clock, it consolidated. And then and only then did it break out of the range and create the body of the day. So if you just keep this in your mindset and in your trading plan, then Rosalind, this would have been a great play for you, because you would have said, you know what, this is Asia session that consolidated all week. I'm sorry, all night. I'm waking up, no consolidation. I'm expecting a breakout. And if you caught it, then you were golden. So it doesn't mean that you're going to miss these moves.
Yeah, I don't think so. I just, with my schedule the way it is, I could trade either London or New York.
Okay.
So I was trying to decide.
Yeah. I mean, for me, I'm looking at both. I'm going to look at midnight and see what's going on. I'm going to probably look at 2 o'clock if I'm not too tired. I'm not going to break my neck for it. If I'm too tired, I'm going to sleep through it. If I'm not, I'm going to look at the new 4-hour candle at 2 a.m. And then I'll be up by, 5 a.m. studying and looking and seeing, did it break? Did it not? Do I have any levels near the Asian market session level, area? If price is around there, if it isn't and price came up all the way up here, if I woke up and I woke up to New York session and price is already here, I've got nothing to do but wait to see a retracement on New York open to see if it's going to retrace to one of my significant levels so I can buy it with the trend.
Got it. Thanks.
No problem. So that's that's how I'm trading it. Mike B, how are you feeling with this? Are you still there? How are you feeling with what I'm mentioning here?
No, it makes sense. Like for me, especially kind of like Rosalind's saying, I know when I can trade. For me, like it's London only. That's it. That's all I got.
Okay.
And so it's trying to make sure that the setup is there,
Yeah.
or wait for a retrace,
Yeah.
versus doing a counter trend trade, which would be scalping, right?
Yeah.
It's just kind of the way it's going to have to go, is
Yeah.
to take less risk. You're waiting for it to do what you're saying.
Yeah, exactly. That's what I'm trying to do. I want to really just try to eliminate, more risk. We're going to be calling it out. We're definitely going to be calling out. We're definitely going to be calling out, some counter trends. But if I can identify it as a counter trend, there was one that I called out. Actually, it was the one that I called out with the actual signal. I said, hey, this is a counter trend, but I'm calling it out. And I gave the stop loss to TP 1, 2, 3, and so forth. And it hit all of them. Well, it hit 2 out of the 3. And because I was feeling good about that. If I call it out, maybe you guys take it and you guys can see, well, maybe this is what a counter trend, a healthy counter trend looks like. I think it was a double bottom on a weekly level, and price was just slowing down. I was seeing weakness in the market, and then I took it with low risk and it shot up. Until we can practice that as a whole together, I would say let's hold off. I know you guys are going to do it, but you're going to do it not on my clock. I'm not going to.
Yeah. Yeah, because you're not telling us don't trade this, don't trade that. You're just trying to look, here's where low risk is.
Yeah.
Trade like this. This is what you're teaching right now, trading low risk proper.
Yeah.
And then if you choose to do a counter trend that you call it or you don't, that's a choice. That has to come down to you and how you trade or how you feel about it.
Exactly. And I think once, I know we all throw our profits out there. Once I start seeing, the power profits are in with the trend, because I'm looking every day, and if I can see that, and I know that we've got that, that's our main way to trade, then I'm going to start to introduce and go heavy on, this is what a healthy reversal trade looks like. And then we can start to tackle that. But right now, let's just, we'll stick to this. For those that are on the lives, I will call out the reversals that I'm going to take. But we're not going to have that formal coaching yet in a classroom setting like this until we start to know, hey, we're catching the daily trends and we're all on the same page. I just want to create that healthy environment. That's all. So
I've been doing those lives too. Like, is that something you're going to try to do daily still?
say that again.
I said, like, on those lives, I've been on them, but are you going to try to do those daily?
Daily. If I'm trading, I want to drop a link.
Awesome.
Yeah, if I'm trading, I want to drop a link, and because it's going to be a day trade, so it's going to be fairly easy. I don't want to say easy, but it's going to be less complicated than going live with the scalps. Right. So I'm down with that. For if I'm trading, if it's in London, if I'm seeing a setup, I'll drop a link. I look on the group. If I see members are online, if I make a comment and I see people come alive, I'll drop a link. Okay, and we'll be on in London, whichever way. If I'm looking at a market for a potential entry, I'm going to drop a link. I mean, it doesn't cost me much time, but just drop it. If I'm super tight, we may not have the best conversations, but but we're going to get in those trades. Yeah, so
that's awesome. Yeah.
So then what I'm doing is, I think we're going to be able to closely wrap this up, is time frames, right? So I'm looking at the 1 hour, the 15, and then the 5. The only time I'm looking at the 5, really, honestly, is when I'm looking for engulfing candles. But other than that, I'm usually sitting on the 1 when there's no alerts or nothing going on. And then after that, I'm sitting on the 15. When I'm sitting on the 15, I've already got in my head where structure is. I already know where structure is, because I've been looking at it. I know where the highs of these candles are and the lows of the 15-minute candles are, and I'm looking for prices to break what I was already what I'm looking at on the 15. And if price is breaking previous mini structures and such, then take it. Yeah, so then then take it. That's what I do. But we will, if you're on the lives are going to support every rule that we have here. It's not going to deviate much. We're going to have obviously a little flexibility on those engulfings, because they're not always going to be present. You're going to get major pushes. We may have some impulsive entries. We may have a pin bar. We may have a tweezer that we'll use for entry. Anything that's going to show us, hey, this is what the market is giving us hints on direction. And that's what I have today. Are there any questions? Is there any thing that maybe I missed and you want me to go over right now? I can absolutely do it. Let's talk about it. Let's get through it together. I'm here. I'm down for it. So if you want me to walk through, once again, this Asia breakout scenario, I can walk through that again, and whatever you guys want. This is your time.
I'm curious, could you go over one more time, like when you sit on the 15 and 30 and 5 or whatever that was? I wasn't clear on it.
Okay, yeah. So usually I'll be on the 1. If it's like, if I'm away from my computer And I'm just looking in every once in a while. I'm just sitting on the 1 hour, just so I can just see overall structure. That's all I'm doing on the 1 hour. You know, I'll look and I'll box out my Asia market on the 1 hour. This is just standard, right? I'll go boom. I'll say, okay, this is it. Whatever hour it is of the day, I start to drag it over, and then eventually I'll have some sort of structure. Here's some wicks. I won't count the wicks. And then when market is getting close to open, I'm then at the 15. And I'm looking at structure on the 15. And market's about to open. And I'm like, shit, I don't know which way it's gonna go. I don't see any, I'm missing some confluences. I don't see anything here on the 15 of engulfings. I'll drop to the 5 and say, oh, there's some engulfings. There's something there that I can use for confluence. Let me use a real chart here, right? So then I'll say, because this has all my indicators, right? And I'll say, okay, this is what I'll use, right? So I'm marking Asia. Right, I'm doing this right now, and that would be on the 1 hour. I'm on the 1 hour. Let's move this. This is going to be on the 1 hour. I'm marking Asia. Let me just drag this in place. I'm just doing this. All right. I'm just doing this. I follow it along every time I look at the chart. I follow it along. I'm on the hour. I'm just getting structure, feel for structure that's being generated. When I'm close to New York open, I then say, okay, let me drop down to this 15, or any market open, let me drop down to this 15. Let me see now, do I have any structure that tells me it's going to sell? Oh, shoot, I've got 1, 2, 3 engulfings right now. Okay, that's a good indication. That's a good sign right now. Anything on the 5? I drop down to the 5. I'll look and I'll count and I'll say, shit, well, you know what? There's some bullish engulfings that are forming on the 5. They didn't show up on the 15. They're showing up on the 5. Maybe I need to be leery of that. Maybe I need to be concerned of that, you know, about that. If what I see on the 5, oh, that little bullish engulfing is showing up on the 5, let me see if it's going to show up on the 15. If it shows on the 15, I'm really confused with which way direction it's going to go. And now market's open and I'm looking at the 15. I already have my structure in the head. I already know where my lows are, and I'm waiting for price to fluctuate and start to show breaks below lows, you know, of structure at this point for entries. That's really it. I'm not
Got
looking.
it. Thanks.
Yeah, no worries. I'm not looking at the 1. I don't care about the 30. The 1 hour is high enough altitude for me, and the 15 is, you know, close enough for me to want to, you know, get a feel for just candle structures, because I'm looking at the day. So I like the 15 if I'm day trading. 5 is really just for, like I said, those engulfings, or maybe I'm looking for candlesticks that are going to give me some confluence. And I will trade on the 15, so my entries will also be on the 15. I'm not really, the precision that I had on the 1 minute when I was scalping doesn't exist here on with this trading style. It really doesn't, you know, because if I enter, even if I enter, let's find a scenario here. Let's see here. Let's see if we can use Friday for some. Let's see if we can use Nas Friday. Let's see here. Let's see if we could do this, right? Let's drop this. So this is what's the time frame on this chart? This is the 30-minute. I'm not on the 30, I stay on the 15, right? I stay on the 15. This is my area here that I was looking at, right? And price is just dropping. I don't even know if this is going to be a good example, because I may have dropped all in 5 minutes. Price is dropping, right? And I'm saying, shoot, price is pushing away from my level. Geez, what am I going to do? I'll drop to the 5. And I'll even look and I'll say, drop to the 5, it's this way, right here. Okay, I'm seeing structures breaking. And in this scenario, even if I were on the 5 and had to take an entry because I had to get granular, say I took it on this candle here, right? I may say, well, my stop isn't going to be this far up. I don't even know how many pips that is. That's 20 pips. Okay, I can live with that. 20 pips I can live with. Say, you know, usually we'd want to put the stop at the swing high. I may say, well, you know what? I'm just going to put the stop on the other side of my weekly level. My stops can be, let me see if I can find a better example. My stops could be, say this was a buy and I was getting in on this candle here, right? My stop could be, say my level was this white line here and everything is building up, but I just couldn't get in. Say I get in this far away from my level. I'll get in this far away from my level and put my stop below the next, you know, low, the next lowest bullish or bearish candle. So I don't always just put it down here. The way I trade, I'm not going to put it always down here because there's going to be late entry. I don't want to say late entries, but there's going to be entries that may be far away from your weekly level. But if you're trading with the bullish day or the trend of the day, that may work for you. That may work for you. And I'll get knocked out. If price comes down here, that may knock me out. That's fine. And if it comes down and even gets closer to my level, and it's just turn around or show signs of turning around with momentum and volume, I may get in again right there, even at a better price now. So it's of course, the rule is, you can always hear everyone say, hey, put your stop loss at the high, above the swing high. That's great. If you can afford that, that's fine. But if not, you've got to find out where else are you going to put your stop loss. And for me, my stop loss is going to be above maybe my level, or above or below, a previous high or low candle, right? Because that's an early indication. If price is breaking structure, if a candle is, if this candle decided to push down and close, if this candle decided to push down, right? This candle decided to push down and close below, say, these candles. Well, it's now a change of structure. Right, so my line was here. This is now a change of structure. If this candle that I got in on started to close below previous, candles, it's changing structure. And I need to identify early, this is changing structure, so this trade may not work for me. Right? We need to understand higher highs, higher lows, and so forth. We need to understand that there are higher highs and higher lows, and that's healthy structure. That's healthy structure. Where's my annotate, right? That's the healthy structure, right? And that's going to be, we know price does this. I was going to do this shit again. Let's do this. Price does this. Price goes up. It creates a lower low. And now creates a higher low. It creates now a higher high. This is great. This is respecting structure, right? It comes down, right? It then turns around. At this point, hey, it's continuing. It's creating a higher low. That's great. If price turns around here and we've done this, well, that's a change of structure. And that should immediately let you guys know the structure, the market flow is changing. The direction of this short-term trend could be changing. So if you're studying the candles, if you do use this same logic with just individual candles and hey, price is breaking above or below certain areas, then it's a change of structure. Look at this, the price came down, price was pushing up. Then we got this, a engulfing candle at a bearish engulfing candle at a swing high on a candle level is showing you a change of structure. It's showing you a change of orders. It's an early sign. So when people have their moving averages or they have something that's way low and they're using that as their exit, but you had signs up here. You had signs up here to help you exit early. Right? Then you're getting these wicks and you're saying, hey, these wicks are cool, it keeps pushing up, but you're getting a lot of wicks. And if anyone studies their candles, when you see a lot of wicks, or the moving up, you see a lot of bottom wicks on an upward trend, it's called a high wave. It's a it's a combination of candles, and it's called a high wave, which indicates that trend may turn around. If you saw the wicks on the top at the low end of the trend, at the swing low, that's called a low wave. You've got to study your candles for price action. We got to dig deeper. We're studying and looking at a few for entries, but no one's talking about the exits, right? And we should dive into that also. Exits using candle structure. All the engulfings, the pin bars, the morning stars, the evening stars, that's for entry, but there are candle formations that you need to look at when you're in the trade for exits. If you want to exit early before your stop loss. Otherwise, you have your stop loss and you set and forget. But when I'm trading, my stop losses may not be, the traditional at the swing low or at the swing high. I'm looking for candle formations. And I'm studying those candle formations for exits also. I'm looking at what an early reversal what the signs of an early reversal may look like when I'm looking at 2 to 3 candles. And that's it. If I were in this trend, and even if my target were up here, right? If this line wasn't here, but it was this purple line or this pink line, fuchsia, whatever, I'm colorblind. But if it were up here and I got this candle here, I'm going to be concerned. I'm absolutely going to protect and take a partial. I'm not going to close my position. I'm going to protect and I'm going to take a partial. I'm in the bullish trend, but I'm going to absolutely protect and take a partial. It's time to tighten it up when you see, you know, these candles. The same way, you know, if you're seeing bullish and candles, bullish engulfing for the entry, or a morning star, even a morning star for an entry, look for the opposite for the exit. Look at the opposite for the exit. If, you know, if this were a push and, you know, you have your 3 white knights and your 3 black crows, we all should know these, you know, these formations. If you had 3, you know, if you had at structure, if you had something that looked like this, structure that looked like this, you know, 1, 2, 3, and then you get this with a nice wick, that's called 3 white knights with a black crow at the end. I'm sorry, it's just called 3 white knights, and that's a sign of a reversal. So you tighten it up. Opposite would be, you know, coming down 1, 2, 3, and then you get the reversal candle. This is price action. This is just studying price action. That's the sign of a reversal. If you're in a sell, you tighten it up. I think I'm going to we're gonna have a separate session on exits, on closing, when to close positions early based on candle formation. I think I'm going to do that separately, because a lot of us, there's a lot of things going on. Some of us are missing the entries or a little concerned about the entries and not very conservative with the entry and not taking the entry and missing out on a great opportunity. And then some of us are not closing these trades early enough. And I think the next session we have, maybe this week, you guys can vote on what night is good. If it's going to be an evening, let me know. We'll set it up and we'll just run it, and we'll just talk about candle structure for exiting a trade, or when to take partials, when to protect, and when to just completely exit. Because I think that's going to be key for you guys as well. See there.
That'd be amazing. You know, breaking up would be helpful too. You know, a lot of info.
Yeah, exactly. It's a lot. That's why we may have to absorb it. And the next one, maybe we open up with questions. Please just everyone absorb it. Like, you know, it is a lot. And then we'll open up with questions from what we learned. And then we will move forward to the exits, when to exit and find that opportunity. And maybe that's the reason why we're holding and we're losing trades, because maybe we don't know. Maybe we don't know what a unhealthy market looks like, or when a market's turning around against us. Maybe we don't know, you know, maybe that's a part of what's driving our bad psychology, because we don't know. Maybe, right? We don't know. I'm thinking, you know, I used to driving, you know, driving is dangerous, but we take that risk. But if we didn't know what if we were in another country and we saw a sign and we didn't know what it said at the end, what it meant at an intersection, then maybe it would cause us to not perform. So maybe we need to review this. And if this is in your arsenal, this may add some confidence and hopefully, you know, swing the pendulum with the psychology aspect of things and feeling more confident and not losing it when we're under a little duress with the market.
Are you going to drop that white sheet as a PDF?
Yeah, I'm going to drop that white sheet as a PDF, as a framework. And then what we'll do is, as we add and identify things, we're going to just expand it. It shouldn't expand much at all. This is it. This is the strategy. This is it. But I will add details. Asia session breakout should begin, I'll say London. I'll include, will be the first breakout of the Asia session. If you've missed that first breakout and it's now a retracement, well, then you need to fall back to the daily, weekly level breakout strategy, which is then you're hoping that you can get a nice run, but the market has already moved. And you probably, hopefully, will catch it on a retracement. So I'll put those details in for more of a step-by-step And then I'll share it. We can all have this. This is not a problem.
Oh, excellent.
So that's it. That's all I have. I hope you guys got some value out of this. I'm thinking a little bit, maybe I overwhelmed you guys a little bit because not too many questions, but please absorb it and please ask. I think that's going to be, helpful to me and to you. And that's going to let me know, do I have to break these sessions up a little bit more, a little bit less? I think it's just going to help.
Yeah,
I think it
definitely
really helps.
rewatch.
Yeah, I mean, like last week, I was a little more swimming in my head about what's going on, but this one actually, I felt like gave me more confidence on what you're doing. So hopefully I can put it in practice.
Perfect, exactly. And then you guys are going to see it on the live. And I'll record the lives, and if you can't see it, there'll be live recaps. But this game is everything that I'm teaching you requires on-the-job training. It really does. And you guys, it requires on-the-job training. This is not like, I guess, law. If law is, A plus, it's not mathematics. 1 + 1 is 2. And if you leave the classroom with a calculus degree and you understand math, that you can just solve problems, math problems. Right? This is not that type of field. This is, you've got to gather the details, you've got to gather the facts, and you've got to put that time in. And you're going to then create a style that is going to work for you. I've had the scalping style, and my scalping style was, when I first started, I came across Raja Banks and I came across Daniel Savage. I was trading with Daniel Savage and Dr. Dollar, and I was lucky enough, Savage allowed me to have open mic, and I was trading, and I was a part of that, and that was cool. And I left that, and I took what I thought worked, and then I looked at the breakout strategies that Roger was doing, and I was like, damn, that's great, but I'm not a 10 pip kind of guy. I want a little bit more than just the 10 pips. And and I created something that worked for me on the scalping game, which was the lightning bolt strategy. They're trading theirs on higher time frames. I took it to another level and dropped it to the 1. It works for me. Right? Then now with the high time frames. Keep in mind, prior to the lightning bolt strategy, I was trading on the 30-minute. People need to know this. People don't know the history. I was trading on the 30-minute. I then was in another community, right? And I was in the community where they trade trendline breaks and dots. A lot of you know that. And I didn't want to step on toes or come across in any way, so I said, let me just stick to my scalping. I don't want to be here and looking like I'm trying to trade the way they trade, but I had that background. Then we came across some others, and that's what they said they did. I never saw entries, unfortunately. I don't understand how, because when I look and I dig deep and I do the back testing, I never saw entries no matter what I asked. And maybe you guys have gotten entries and seen it. I haven't. I don't think you have either, but you don't have to answer that. But I was able to debunk when I was in Africa. I was able to, not debunk, I don't want to use that word. I was able to see what works for me and what doesn't. And instead of looking at all the rules, because I put things in truth tables, I'm a logical person, I'm a developer. So everything, for me to create logic, I got to have a line item. New York, bullish, bullish candle, break structure, support is now resistance is now support. Tomorrow should be bullish. Okay, but then except when the wick touches the next level and come, I couldn't put that in a truth table. I had to abandon that, and I had to look at what works for me. It works. If it works for everyone, that's great. I'm sure it does, and that's great. But what works for me? So I had to say, well, this doesn't work. But as I was working it, I'm looking at, I just want to catch the real trend. What I'm seeing or hearing, they're not catching the real trend, and they're in it for half the move or a fraction of the move. I can't see it. I'm looking. I'm a back tester. So I need to then back up my schedule. I was lucky. I was in London. My day in Africa was Asia and London and New York were all in the same session. I'm talking from London open to New York close. It was all in the daytime. I was up. I wasn't tired. I'm looking and I'm saying, for me to catch this day trade the way I want to, one of my priorities is that it can't feel like scalping. Otherwise, I could go back to scalping. I was getting the bag with scalping. So day trading has got to feel totally different. I'm now looking at it and I'm saying, well, the only way to catch the true trend of the day is to get in after the wick is formed and the body is created. And when I started to back test that over numerous times, it was an easy strategy. And since then, my long trades that I'm getting have been nothing but that. And that's how, so my point is, take my PDF, use it. I would say, don't mix in, like what I don't want you to do is don't mix in moving averages and lagging indicators. That's going to just screw everything up and you're going to be really thrown in a loop. But take what works for you, and there's going to be something that you're going to do different, and it's going to then be yours. Some of you guys are going to say, well, no, I'm sitting on the 30-minute. I'm sitting on the 30 and the 5. And if that's what allows you to see the market better, take it. Take what I'm teaching you, take it and make it yours. It's got to work for you. It's not going to resonate. That's the problem with, when you teach trading, the strategy has got to resonate with the student, right? So I've got to put you in the proper mindset, and I want to then give you the support in real live action in the real life market where you can see that. I'm not sure, where else you're getting that. Roger does that, you got to be a part of his academy and stuff, but he does it live. Roger Bank, he does that live, and I think he goes detailed with it still. I don't know. But whoever you learn from, they should be able to say, here's the manual, and then let's go to war together. I want to fight with the general that is going to pick up the gun and be like, yo, I'm going to lead from the front with you guys. And that just works for me. I'm just saying that just works for me. Take what works for you into your own hands and work create your style. Create your style. If we're focused on day trades, take what I have, and if there's something different that you see that will work for you, after you've tried this for a while, give it time. Give it some time. Last week we had great days. We had great days. I think some of you guys got caught on the day we had no volume for all of New York, and you were trying to force things. And that's when I got off the Zoom and I said, no one should be on that. And I even got on and I said, I know you guys are looking at that reversal. I know you guys are looking at that reversal. Don't do it. Just don't do it. So with this blueprint, if you're just sticking with the targets, you eliminate 80% of all that noise. You're not trading around that stuff. And if you're not on the 1 minute, this is why I say, I want you to start with looking at the time frames that I'm looking at. If you are not on the 5 and the 1 sitting looking at that, you're going to avoid a lot of the noise. Stick with the time frames that I'm saying. If you're looking at the 5, just look and then get back to the 15. The 5 is going to print, and then it's going to look great. The 1 is going to print, it's going to look great, and you're going to be entering on things that don't exist. Figure that part out. But since we're day trading, I don't want you guys sitting on the 5 minute all day. I don't want you guys doing that on the 5 minute all day. The videos that I dropped, I got to check myself, but the videos that I dropped, I'm going to look. I think I was on the 15 in the 1 hour in that video that I dropped from Friday's trades. But you're going to make this trade yours. Here's the foundation. Here's the framework that I use, and work the framework to your advantage. This thing works for me. I'm hoping will work for you if it can resonate with you, right? But I've given you not just the setups, but my workflow, how I look at the day. Every day is a brand new day. I'm starting today. I'm not looking at Friday. I don't even give a crap what happened Friday. I don't care. I'm looking at today. Today is a cycle of 3 sessions. There's 3 sessions, and they are intertwined. Okay, volume is going to play out in each one. We have to follow the volume, right? We can't get in without volume and momentum. So I don't care if it's an Asia session breakout. If there's no volume in London and no volume in New York, guess what? We have to wait for the next day for Asian to play out, for the volume to show. Volume will shift. Volume's going to shift throughout your day, throughout your session. It's going to shift. And you need to follow the volume the same way, to follow the sun, where you have call centers all around. There's a call center all around the world companies have, where no matter what, there's staff on, because it's called the follow the sun model, right? And if you could just follow the volume for that day, wait for that volume and momentum, identify where it's at. It's going to be at those timeframes that I mentioned. It's going to happen in those timeframes that I mentioned. Unless, of course, it's like some news event, or the president gets up, at 2 o'clock and, 12 o'clock, and it's some other, thing that stands out that's going to make the day different. But on regular days, follow that volume. It's going to happen in any of those time slots. And may not just be once. It's going to happen on a few of those time slots. If you can get in on that Asia session, you've gotten in on that Asia session break, you've gotten in on the wick of the candle. You've gotten in when the wick has turned to body. And if the direction is correct, you're in it for the whole day, And that's all I got for you guys. So I hope everyone enjoyed, and I'm going to catch you guys on the charts in the AM.
AM, we're going to do a live Zoom in the morning.
Yes, sir.
All right.
Thank you as
sir.
always, man. We
Appreciate it.
appreciate it.
Take it easy, guys and gals. Bye.